All right, today we're going to talk about something absolutely critical in developing a trading strategy, forward testing. This is the step that really separates a strategy that just looks good on paper from one that can actually survive and, hopefully thrive out there in the live markets. Let's dive in. And let's just kick things off with a pretty stark warning, right? Getting your testing process wrong isn't some small academic mistake. It can be a direct path to failure. We're talking about serious financial loss here, so the stakes, they couldn't be higher. So where does it all go off the rails? Well, it often starts right here, with something I like to call the backtest illusion. You know the story. A trader builds a strategy, runs it on historical data, and boom, this beautiful, perfect equity curve pops up. You get excited, you think you've cracked the code, but this perfect past, it can hide a really dangerous future. To understand why, you've got to get the difference between two kinds of data. On one hand, you have in-sample data. That's all the history you use to build and tweak your strategy. But the real test, the only thing that matters, is out-of-sample data. This is fresh, new data that your strategy has never, ever seen before. It's the only way to find out if your edge is for real. See, when you only use that in-sample data, you run into this huge problem called overfitting. This is when your strategy hasn't actually learned a real pattern in the market. Instead, it's just memorized all the random noise and quirks from that specific historical period. It's perfectly tuned for a past that's never going to happen again. So, you've got this perfect strategy. Why does it so often just completely fall apart the second real money gets involved? Well, the failure usually comes from two different directions. One is all in your head, and the other is baked right into the numbers. First, let's talk about the psychological gap. Backtesting is like working in a nice, clean lab. There's no adrenaline pumping, you don't feel the sting of a loss, you just click to the next trade. But live trading, that's the battlefield. You're dealing with real money, real fear. You might have to wait 3 days for a setup, and then when you finally take it, you immediately go into a drawdown. The key thing to get here is that a backtest proves the math works. It does not prove that you work under pressure. And here's the second front, the cold, hard statistical truth. An overfitted strategy isn't just kind of unprepared for the future. It is statistically designed to fail. It was built on market noise, not a real edge. So its performance is almost guaranteed to completely collapse when it faces market conditions it wasn't tailor-made for. So how do we fix this? How do we build real confidence that a strategy is tough enough to last? Well, this is where the professionals separate themselves. They use a really rigorous method that bridges that gap between the lab and the battlefield. It's called the walk-forward test, and it's basically the ultimate gauntlet for any trading strategy. Walk-forward analysis is all about creating the closest possible simulation of real-world trading. And here's the most important part. It judges a strategy only on how it performs on out-of-sample data. That data it has never seen before. That's it. That's the whole game. The way it works is actually pretty simple, but it's incredibly powerful. First, you optimize. You find the best settings for your strategy on a chunk of historical data, say the last 2 years. Then you validate. You take those exact settings and see how they would have done on the next chunk of data, maybe the next year, which your optimization has never seen. And finally, you roll. You just slide both of those windows forward in time and do it all over again, and again, and again, across all your historical data. And it's this cycle, this constant process of optimize, then validate, that really acts like a truth serum. It powerfully reveals whether your trading edge is the real deal or just a fragile illusion. I mean, just look at this table. It says it all. A robust, solid strategy might have a profit factor of 2.1 in the optimization, and it drops a little to 1.8 on the new data. Okay, that's expected. Some drop-off is normal. But look at the fragile strategy. It looked incredible in the backtest, a 2.5 profit factor. But on new data, it completely collapses down to 0.85. That's a massive red flag. That is an overfitted strategy, plain and simple. And look, the consensus among professionals on this is unanimous. It's not really up for debate. If a strategy hasn't been properly validated with out-of-sample testing, it simply should not be traded with real money. Full stop. It's a non-negotiable part of the process. So if we put this all together, we can lay out the complete roadmap, the journey from just a simple idea to a truly battle-tested strategy. It's all about proving your edge is real, and you do that by moving step by step from simulation into reality. You really have to think of it in these 3 stages. First, you're in the lab. That's backtesting, and all you're doing is proving the math is sound. Then you move to the simulation. This is forward testing, and its job is to prove that you had the discipline to actually follow the rules. Only after you pass both of those can you even think about stepping onto the battlefield of live trading. And that simulation step, it has a very clear, mandatory rule. You have to trade your exact strategy on a demo account in real time for an absolute minimum of 30 days. This is how you prove to yourself that you can actually follow your own rules when the right side of the chart is totally blank and the pressure is on. Seriously, do not skip this step. The market will be more than happy to take your real money while you're trying to figure it all out on the fly. So this brings us to the one question you have to answer before you risk a single dollar of your hard-earned money. Your strategy aced the backtest, sure, but will it survive first contact with reality? A great backtest is just the start of the journey. The real test is whether your strategy, and just as important, whether you can handle the unpredictable, chaotic live market.